Morning, everyone. Welcome back to your weekly market outlook. This is for the 16th of September 2024. Let's get started really quickly and review last week's macro. Obviously, we were looking at inflation number, and surprisingly, in terms of the headline inflation number, it actually came down lower than what the market consensus was, which is 2.6%. So we actually had a huge drop in terms of inflation. Now, we need to talk about this because this is more or less. I know the initial reaction when the data was released was that it was, market was reacting for a much better US dollar and stuff like that. But eventually, it should turn out as per expected. We have a lower inflation that gives room for the FOMC to cut interest rates, and they are able to be a little bit more on the aggressive side in terms of cutting interest rate, which obviously will lead back into this week's interest rate decision. But other than that, if we take a look at all the PPI numbers, it was pretty much stable. We don't actually see a huge jump in terms of inflation. In fact, if we take a look at the year-on-year PPI number, it was a little bit lower than what the market was expecting as well. So we do have a softer inflation number. And in terms of the ECB interest rate decision last week, as per expected, we saw the cut happen, and in terms of the gap for the overnight rate and the lending rate, it was pretty much reduced to 15 basis points, which is per market expectation. So not really much of a surprise last week, and it was really more on a position adjustment. We saw a little bit of a wild swings in the market, but eventually, once everything has settled down, the US dollar was heading lower, and that was the expected move that we have been anticipating for the US dollar, and we'll take a look at that from the technical perspective. Now, this is the data for this week, and on Monday we do have the Chinese market and the Japanese market closed for holiday, but that's not stopping the Asian session into selling off the US dollar, and we'll take a look at that from a technical perspective. But other than that, we're looking at the US retail sales number, but at this point it's really not that important. We have the UK inflation number, which is going to be on Wednesday, but again, the main event would actually come in on Thursday if you're in Australia or in Asia. Obviously, the Fed decision that would come in on Thursday morning. It will still be Wednesday in the US. But if we take a look at the interest rate decision, right now the consensus is still for a 25 basis points cut, but the CME Fed Watch tool, we are actually looking at a higher probability of a higher cut. Right now it is pricing about 59%, and from now until the eventual interest rate decision, which is going to be on Wednesday, Thursday, you're likely going to see a lot more traders pricing in for that bigger cut this month. So it won't be a surprise if the FOMC decided to go with a 50 basis points cut, and market is starting to price that in. So just keep that in mind. If we get a 50 basis points cut, then everything is all good. But if we only get a 25 basis points cut, we might actually get to see a stronger US dollar on Wednesday, Thursday, just because market has been overpricing in for the interest rate cut. But I wouldn't be too surprised if we get that 50 basis points cut. At this point in time, we saw inflation come down. Obviously, the labor market is still not doing that great, but it's not that bad either. And this is actually a good time for the FOMC to get ahead of the curve by cutting 50 basis points. So it'll be very interesting to see what happens there during the rate decision. And then on Thursday, we're expecting the Bank of England interest rate decision as well. On Thursday, Bank of England is currently not expected to cut interest rates. So the expectation is for them to hold interest rates steady at 5%. That's the current consensus. In terms of the voting, we are still not getting a huge vote in terms of a potential cut as well. So we'll see what happens. But if put 1 and 2 together, obviously the FOMC is currently being priced in for more of an aggressive rate cut. The Bank of England is expected to hold interest rates. We should see a stronger sterling. At the same time, if we take a look at Friday as well, Bank of Japan is going to be added again. They're not expected to hike interest rate at this point in time, but they might announce when the next next hike is going to be, and we're expecting them to announce October to be the rate hike for the Bank of Japan. So 3 central bank announcements. One very easy to read, that they are going to be cutting in rates aggressively, which is the FOMC. Bank of England probably on hold. Bank of Japan, which is likely going to be on hold as well. That puts the US dollar as the weaker currency here, and this is pretty much in line with what we're looking at from a technical perspective. Now, this is the Aussie USD. You can already see the Aussie USD performing exactly as what and how we wanted for this month. We were expecting that correction lower. We're looking at 67 cents as a potential bounce. Even lower than towards 66 cents, that's even allowed. And so far, we have seen that turnaround. We have the confirmation. We have seen the stochastics turnaround as well. And price is currently above 67 cents. Now, obviously, with this one here, this opens up that pathway back towards 69 cents. And consider this: the Australian dollar is actually the weaker currency, which has been hammered by a weaker Chinese data. And this one here is still maintaining its position above the Ichimoku cloud. We still see that turn around here. Next up for the Aussie USD, we're expecting a return towards 68 cents. And if we get that bigger cut from the FOMC, then it really opens up that move towards 69 cents as well for the Aussie USD. The next up is the Euro USD. A very clean bounce off that 1.10 post CPI numbers. Right now we have one more resistance, which is where at time of recording this is currently facing a resistance. So we do expect Monday to be the day when the Euro USD is going to be testing this resistance, which is 1.11. And once we clear off 1.11, there's actually not a lot to stop the euro to return towards 1.12. In fact, we are looking at a potential return towards 1.1250, which is where the 127.2% is currently located, and that's also where the previous order block is for the Euro USD. So all good in front. In terms of the Euro USD is currently trading above the pivot level. We basically just need to clear off 1.11 as a key level. Once we clear off 1.11, not a lot of resistance for the Euro USD to the upside. Likewise with the Pound USD as well, post CPI we had that turnaround at key critical 1.3, and I really like how the pound is turning exactly at that 1.3 level there. Again, that was the previous resistance that was broken, and it now has been confirmed and tested as support. So this is a very strong psychological price level. Not really expecting the sterling to actually drop back down below 1.3. Currently it is trading above the pivot level and also above that 50% retracement level. And look at where the resistance 1, 2, and 3 in terms of the weekly pivot is currently lined up at. It's lined up pretty much around the Fibonacci levels, 61.8 where the R1 is located, 78.6 where the R2 is located, and R3 is where we have that confluence with 127.2%. So for the sterling here, we do expect one more resistance, which is 1.32. Beyond that, we are looking at a move higher than 1.33 for the sterling here, and we do have the momentum to back it up. The RSI is turning back up again once it's above 60 and the stochastics crosses up. That pretty much will set the movement in stone here, and we have that clear bounce. I circled that. It's a very clean view on the sterling here. We retrace to where we want it to be, retrace to a range where a lot of buyers are looking for that retracement as well. And obviously you can see the demand there around 1.3. We saw that quick turnaround, and right now it is testing 1.32, but I think it's not really going to be a tough resistance for the sterling to break here. All right. Lastly, we have the dollar yen, and obviously at time for recording, the dollar yen as it is going lower again. We have that final resistance right now, which is at 140, and price is already trading below December 2023 low. For the dollar Japanese yen, that's already below 141, and it has been trading below 140.34 as well. This is right now trading around 140 at time for recording. This is going to be the last resistance to be broken. Once price breaks 140, it actually opens up further movement to the downside. We're currently projecting a move towards 138, which is going to be July 2023 low, right? So what we're looking at here, we're definitely not going to be looking for a buy on the dollar Japanese yen, but any retracement that's going to be met by sellers here. And this is on the fact that in the short term, in terms of the interest rate differentials between the US and Japan, this is going to shrink because right now the FOMC is starting to cut their interest rates, and they're going to be a little bit more on the aggressive side, while the Bank of Japan is still likely to maintain that view where, yeah, we have room to hike interest rate, and we want to see at least 1% in terms of where our interest rate wants to be. So we are expecting that move there, which is the FOMC reducing at least 1%. We are expecting Bank of Japan to at least push it up to 1%. So it is about 2% of interest rate differentials. That's going to cut about half of the potential previous carry trade amount there. So obviously we are still in view of a stronger Japanese yen, at least towards the end of the year here. All right, so with that, good luck with your trades, and I'll see you soon.